what kind of a world we are living in right now. The financial instability is there, job uncertainty is there, people are scared.
Geopolitics is the biggest challenge for now.
In times of war and inflation now, people instinctively hold on to cash or gold. But markets tell a different story.
Everybody wants shortcuts. Everybody wants to make quick money.
Right.
That's the recipe for disaster. Don't try to time the market.
But time in the market is important. Hello and welcome to the Dreamcatchers Show Season 3, where we capture inspiring stories one dream at a time. Hosted by your very own Shalima Motial. Powered by Mandar Padhye, the Resilient Investor. Sponsors Infinity Jewels. Supported by Realty by Dipti. Homestay, property upgrades and real estate investments. Media partner Crazy Talk. Hair and makeup by Purnima. And as we promised that we will keep getting inspiring guests, this is really the need of the hour, and you must watch this episode because you know what kind of a world we are living in right now, right? The financial instability is there, job uncertainty is there, people are scared. So we have with us an expert who's going to help us with our future in finances at least. Yeah, let me tell you about Mandar Padhye. He's the seasoned investor, author and thought leader known for his book, The Resilient Investor. With years of experience in financial markets and a deep understanding of human behavior, Mandar helps people navigate uncertainty with confidence and clarity. His approach goes beyond numbers. It's about mindset, adaptability, and building real financial resilience in a changing world. So please help me welcome Mandar Padhye to the Dreamcatchers Show. Welcome.
Thanks, Shalima. That was a very lovely introduction. And I'm happy to come back again on the show.
So that is what my first question is, that since your last visit, the world has changed drastically, right? There have been conflicts, economic shocks, and social realignments. So when you look at what you shared with us in the last podcast to now the way the world has become, what are your thoughts?
I think there's still the same line I would continue. Uncertainty is the certainty.
Okay.
So I think the theme is still the same.
Okay.
Okay, the reasons can be different, but uncertainty is the theme today also. Geopolitics is the biggest challenge for now.
Right. So you titled your book, The Resilient Investor. What does resilience look like to you or for an individual in 2026 compared to your first visit? The same uncertainty is there, but what does one do to be resilient about that uncertainty?
So to be fair, you need to be resilient with your own lifestyle, your own decision, your own mindsets.
Okay.
Right? So mindset is the key thing here, right? Because there are a lot of noises around you. Okay. In this noises or these noises, you need to be really resilient, which means stay grounded, stay disciplined. That's still the discipline way I would say would work for.
Right. So when you talk about noises, you mean the social media noises, the news, and all that fear mongering?
So I think today social media has taken us for most of our time. So whenever we have a free time, rather than talking to a friend or a family member, we want to have the feeds coming in, look at the feeds, look at the news. And the most important thing what people do is act on it. This is exactly the vicious cycle.
Right.
And that's where I say many a times, or I've done sharing on this, it's sometimes good to not listen to your phone or keep away from social media.
Right.
It will give you a peace of mind.
Interesting. So is financial resilience more about emotional intelligence than number crunching today?
It is always about emotions. Because we are all emotional animals.
Okay.
Right? And we react to a situation, we react to a news, right? And we want to do something about it. It is very difficult knowing a news or knowing an incident
And
and
not
not
acting.
acting on it.
Right, right.
And sometimes doing nothing is the best decision.
Oh, okay, interesting. Like keep investing the way you were investing, irrespective of what's happening in the world.
Absolutely. So we generally set disciplines. I always say you have a disciplined investment. Don't try to do funny things with it based on the news, because these will keep on coming every day. The events will be different.
So, like in times of war and inflation now, people instinctively hold on to cash or gold, right? So, but markets tell a different story. What are the smartest and most risky places to park one's money right now?
I always say keep what is required as emergency fund, never to touch that.
Okay.
But whatever you want to invest, stay invested.
Okay.
Don't try to time the market.
Right.
Okay.
Right.
So timing in the market is totally out. Okay. But time in the market should be there.
So don't time the market, but time in the market is important.
Correct.
Oh, that's nicely put. So many middle class professionals feel financially stuck. High costs, low growth, and uncertain income. How can they reset their financial goals for the next 5 years in such a climate?
I think you answered the question in your own. Reset is the word. So I may
Okay.
say realign yourself. Look at where you are again.
Okay.
Right. So this is very important, because in which phase of life you are, the decision will be different for you. For example, you are in the bracket age group of 50 to 60. It's a very different way, because if you lose a job, and which is very common these days, you really need to realign yourself,
Okay.
relook at yourself. Okay. And then work on your budgets. Budgeting is the key here.
Right.
But never get into a mode where you don't invest. So you need to still stay invested.
Stay invested, right. So that's what, I was going to ask you that next, that if someone's starting late, say in their 40s or 50s, what resilient investor habits can still create a meaningful safety net?
So the best answer to this is whatever you earn, your 20 to 25% should be savings and investments
On a monthly basis.
on a monthly basis.
Okay.
You will never go hungry.
So no matter what your income is, your middle income level or senior or whatever, 20 to 25% one should save every month.
Correct. Save/invest.
And do you think that's possible in a place like Singapore, which is so
Anywhere.
expensive? Yeah.
You need to realign. That's where I said you need to realign your own expenses.
Okay.
So you need to save this. So first you pay yourself, which means first you save 20 to 25%.
And then manage with the rest of these 75
Absolutely.
to 80%.
Absolutely.
Wow. Okay, so what does Mandar Padhye personally do to stay composed when the markets or global news spirals?
So these are very tough calls, actually, to be fair, but I have learned to discipline my mind also. In fact, last 1 month, I think I just did 2 trades personally.
Okay.
But my disciplined investment has been there,
Okay.
and I have not done anything to it.
So
it's
that's
still-
been constant
it's
and you haven't
constant.
made erratic changes to it.
Absolutely not, because that's the danger of knowing a news or acting on a news. People everybody wants shortcuts. Everybody wants to make quick money.
Right.
That's the disaster, recipe for disaster.
Right, okay. So with tech disruption, AI and remote work reshaping industries, do traditional portfolios like stocks, bonds, gold still hold? Or should individuals think in terms of skills as assets?
There are 5 asset classes. So we will still stick to basic 5 asset classes.
So can you describe these 5 asset classes?
Oh, sure. So stocks,
Okay.
cash, bond, real estate, commodities.
Okay. And so these are the classes where people invest irrespective of what's happening in the market.
So all those market, whatever trends you see, they're all part of these asset classes. We are not talking about alternate asset classes, which will be your cryptos. We don't talk on that.
So the 5 classes you just spoke about, can you explain a little in detail about each one of those classes?
Sure. So let's look at first asset class, which is cash.
Okay.
So cash is pure cash.
Okay.
Okay. So when you exchange cash, you get worth of goods or worth of services once you exchange cash.
Right.
This will not grow on its own.
Right.
If you have a $10, the $10 will give you a $10 worth product or $10 worth service.
Service, right.
Right? But what happens over a period of time, the value of that $10 will go down. And that's where the inflation kicks in. So cash is good to hold, but it will not grow.
Right.
Right?
Okay.
It will actually, the value will go depreciate because of the inflation. So what you can buy in $10, maybe the price has gone up or you get less.
Right.
So that's with the first asset class. The second asset class which we can look at is a bond.
Okay.
So bond can be what can be issued by government. Those are called sovereign bonds or issued by a corporate. So typically bond is like they borrow X dollars from you. Meaning the investor, and they give you a fixed coupon.
Okay.
Coupon is basically an interest.
Okay.
Okay, so it can be a 1-year bond. So after 1 year, they'll give you a coupon and they will give you the principal. So this is fixed at the time of issuing.
Right.
Right. So bonds are great to hold.
And
but again,
safe?
I may not come to say safe.
Okay.
Generally, sovereign bonds are considered safe, but which country is issuing them?
Right.
So there's a rating. So it
Okay.
depends on a rating of a bond also.
Understand.
So typically AAA rating are the best bonds, you may say. So these are the bonds. Good, but again they may not help you to beat inflation.
Okay.
Right? And as the bond coupons go higher, it starts becoming a bit riskier.
Okay.
Because the chances of getting it default are possible.
Right.
So their classification may go B or C depending upon who's issuing them.
Okay.
So that's with the bonds.
Okay.
The third can be your stocks or equities. So which are issued by the companies, corporates, okay, who are basically businesses. Right? So you are actually a shareholder or you are the profit shareholder. So profit or losses, whatever, you are the part of the company. So they issue shares or stocks.
Right.
So these are good to build your growth, liquid but very volatile.
Oh, okay.
Very volatile, depends on the stocks, markets, and a lot of different.
So the war situation will really make it go up and down crazily. Okay.
Absolutely. So highly liquid but highly volatile also. And the fourth is real estate. So property, typically.
Okay.
These are great asset classes which the mankind has known. People have made decent money out of this asset class also. But this asset class is also very highly illiquid.
Right. Right.
Right. So need to know what the challenges are of this asset class. And the fifth one is the commodities.
Okay.
So commodities again a great asset class unless until you know how to play it. That is very
So
different.
what comes under commodities?
So commodities will be your gold, your silver, those are metals, or energy, which is oil.
Okay.
So all this come into this. Water is a great commodity, which will be a future commodity, I believe.
Interesting.
Because
so
clean
I thought
water-
when you're saying gold, silver, it's like physical gold and silver that we stack up or buy or something. So explain how do you do that with water and oil?
So yeah, as I said, these are all future contracts.
Okay.
Oil is future contracts basically. Water, there are different funds available to invest into that commodity asset.
Oh, I
class.
haven't heard of water earlier, ever, in terms of investment. But it is a valid point. I mean, so many countries, especially today's day and age when, you know, the countries are going all inward and all of that, water is becoming an issue.
Absolutely,
Yeah.
absolutely. Clean water. But now this here is interesting. So every asset classes or every asset class would have its pros and cons. Right? So there is another component which is called as derivative of these asset classes.
Okay.
And that's where we invest into, which is UTs, which are, we can call it as unit trusts or ETF, exchange traded funds.
Okay.
So these are the ways we actually help our clients to invest into different asset classes.
Oh, very interesting. You were always into finance?
Oh yeah, always. I
Yeah.
was always exposed to finances. I started investing long back, like right at my age of 18, I started investing. When I
Right.
was in India, I was still investing. When I came here, I learned this game of investments and I did my master's in finance.
Oh,
and
nice.
that's where my journey of investment really started in Singapore.
So did that change from these 5 different asset classes in your, say, 20s? It was A, 30s it became B, then 40s it became C, and so on and so forth.
So
Did that keep changing?
So as I said, many a times these asset classes hold a basic asset class, but investing into, when it comes to retail investments, it is always the UTs or the unit trusts, mutual funds, or stocks or ETFs.
Right.
So I'm not into buying real gold, or
Okay.
I'm not into buying properties or
Okay.
buying a pure bond, but derivatives of those.
Right. And you were always like that and continue to be like that, or did you change with
So
time?
it depends. It's a great question, because when you're young, you have 30-40 years of bringing in new money. So then you're more risk taker,
Right.
right?
Right.
But when you are in the mid career, that risk taking ability goes down, because now you have a family. And when you are towards your 50 to 60 age, that's the age where you'll be depending more on your not active income but passive income, right? Then you need to see and align your risk taking ability accordingly.
So if someone wanted to bulletproof their finances against war, inflation, and job instability, what 3 concrete steps would you advise they take this year?
You need to keep your emergency funds, definitely.
Okay.
That you keep separately.
Right.
So the next thing is look at very basic income generation funds or
Okay.
options,
Okay.
and the rest keep it in growth still,
Okay.
because
Fantastic.
these are still the good opportunities to pile up.
Right. So make money even when situation's not that
Absolutely, because to be fair, Shalima, wars come in or challenges come in, they are not going to last long. There will be certain period. It's not that the whole thing will stay there for 1 year, 2 years, 5 years, 10 years. Unfortunately, last 5 years were different,
Right.
because there were series of events, I would say, which came in, which have really disturbed the markets. But still, the markets are proving it different. So that's why I
Right.
always say, don't time the market, time in the market.
Beautiful. That's right. So you've often said that investing is a long game. But how do you balance patience with the need for agility when the world changes overnight?
That's a very great question, but that's where your mindset comes in.
Okay.
So it's not a 2-minute noodle,
Yeah.
So in this very fast changing world also, your pace should be very constant.
Okay.
We have a very great example with the greatest investor of all times, Mr. Warren Buffett.
Okay.
His actually started delivering after he turned 60.
Interesting. Okay.
But do we have that patience? None of us have that patience.
Yeah.
So it is, how do you discipline yourself? How do you change that mindset? I talk a lot about long-term investments, but many a times we all want to have quick returns, quick gains,
Right.
shorter time. So there is, to be fair, there is no silver bullet.
Okay.
So long-term will play better, because it's the game of compounding.
Right. And then you have instruments which give monthly also if people want cash flows and stuff.
Yeah, there are a lot of options.
Right.
There's a lot of
Right.
options available.
Okay. And has the meaning of wealth evolved for you personally over the years?
Yes, first wealth was just money in the pocket.
Okay.
Now wealth it can be very differently. So wealth can be what you leave behind is also one of the great definition of wealth.
Oh, nice. So what
So now I'm
legacy are you
thinking
leaving behind?
on those lines,
Oh,
So
wow.
one is what you will consume, and one is what you leave behind.
Interesting.
So the
Okay.
definition has changed.
Changed, yeah, hugely.
Definitely.
So earlier it was all about you, and now it's about the next generation. What legacy you're leaving behind.
Absolutely.
So if the resilient investor were being rewritten today, what new chapter would you add, and what would you call it?
Uncertainty, I would definitely add to it.
Right, and you would talk about wars and stuff in it. then?
I won't talk about wars, but uncertainty in everyone's life, because how do you prepare for that?
Right.
So as always, I say you can't control the surroundings around you. The only way you can control is you.
And your reaction to
and
it.
the reaction to
Right.
it. Right. So it's all about, I would like to write a chapter on uncertainty and mindset.
Lovely, lovely. What one mindset or value should every individual hold on to, no matter how uncertain the times are?
Stay out of the current noises around you.
Okay, so keep your phone aside, right?
It's difficult. It's difficult because your
Right.
entire life is on the phone.
Right.
But try to minimize, try to minimize that.
Right. And so there's this one question that we always ask on the Dreamcatchers show. What's the dream you're still chasing?
That's a difficult question because I'm not chasing any dream. I love to take it 1 hour at a time.
Okay.
So yes, I do plan for the future, but I love to be in reality.
To live in the present.
Present.
Okay, very interesting. So those were all very good questions with very good answers to them. Now we wouldn't give you that much time to think. We have a rapid fire section for you. So I will ask you questions and you instantly answer without thinking too much.
Sure.
Okay. So the first one is gold, crypto or real estate. What's your guilty pleasure?
Gold.
Oh, lovely. If you weren't an investor or author, what alternate career would you love?
Food.
Oh, so restaurateur.
Maybe.
Oh, nice. Okay, morning person or night owl? When do you get your best money ideas?
Morning.
Morning. Which do you check first? Stock portfolio, news feed or WhatsApp?
None.
None. Wow.
Maybe a message from a client.
Okay.
Or a new prospect.
Okay, so that's WhatsApp, I would say.
Yeah.
Right. Buy low, sell high or stay calm, stay invested. Your lifelong motto.
Stay calm and stay invested.
If you could give your 25-year-old self one piece of money advice, what would it be?
So this is a great question because as a 25-year-old, we are actually getting exposed to the new things. So the whole world is at your feet, and with the kind of exposures we have, you can actually go wrong
Okay.
or go extremely right.
Nice.
Okay, so here my suggestion is take your time to understand the options, explore the world, talk to your parents.
Right.
They are your best guides at that point of time. And if you want to start especially investment journey, take a baby steps. First, save.
Right, right.
That's the simple advice.
Oh, that's nice. So you would, as a 25-year-old, save.
Save,
before
because-
you spend.
Correct,
Right.
correct.
Okay. One person, real or fictional, who embodies financial resilience to you. Mandar Padhye, the resilient investor. Yes. Stocks, savings, or self-growth. Where would you invest your last $100?
Self-growth.
Self-growth. Nice. Describe 2026 investment world in one word.
Uncertainty and geopolitics.
That is so true. And with that, thank you so much for your time. We've really enjoyed talking to you. We've learned so much about the financial world, the mindset change that we need to have,
Absolutely.
savings before spending. That is such an important lesson. Any parting words you want to tell that one person watching right now?
Stay calm, stay invested. I think that's the best message I would say.
Right. And thank you so much for watching. Stay calm, stay invested, as Mandar said. I would advise you to follow your own discretion when you are investing and keep watching the Dreamcatchers show. We are on YouTube, Facebook, Instagram, TikTok. If you don't want to watch, we are on iTunes and Spotify as well. Do listen to us. And if you're the reader material, we have a blog on Medium. So do look out for that. And thank you for watching us all the way till the end. Till we meet again. Thank you, Mandar, for coming. We really had a lovely time. So somebody was telling me you're going to give us money to invest. Cha-ching, money, money, money.
Who said that? By the way, money you need to earn. I will only show how to earn and
How to invest. That's a good one. So how to earn and how to invest. Cha-ching.